Hey traders, and welcome to Structure-Based Trading Episode 2. Now if you haven't had a chance to watch Structure-Based Trading Episode 1, then I'll put a link in the bottom left hand side of your screen, and you can check that out before or after watching this video. Now if you're new to this Structure-Based Trading series, in this series I go through the market and show you guys daily levels of structure that I'm paying attention to and that I'll be using for trading opportunities in a program that I run for my website called the EAP, and also in my personal trading. These levels are what I consider important levels in the market. And today what we'll be doing is going back and looking at some of the levels that we pointed out during our last structure-based trading episode and seeing how the market reacted off of those levels. I'll also be pointing out the new levels that I'll be looking at going into next week for trading opportunities. So if that sounds like something you'd be interested in, then make sure to stick around through the intro and disclaimer. Go ahead and click that like button for me. If you're new to the trading channel and you'd like to be alerted by email when I come out with new educational content about Forex, then go ahead and click that subscribe button as well, and I'll see you guys on the other side. Alright guys, welcome back. And we're actually going to start out here on the Aussie dollar. And what I'm going to do first is show you guys a clip from Structure-Based Trading Episode 1 where I'm pointing out the key levels of structure on the daily chart of this Aussie dollar. So let's take a look at that now. Here on the daily chart of the Aussie dollar, I'm going to go ahead and point out my support level. As you can see, one of the lower lows here that I see as a significant level of support. And the next level will be right in here. As you can see, we zoom out a little here. Market found support here multiple times in that area, coming down and being pushed back up from that zone. So those are my two support zones. If the market makes it down to those zones, that's when I'll be looking for long opportunities based on the EAP rules. And for resistance, alright guys, so as you can see, this level circled in black here is the level that we were looking at on our previous structure-based trading episode. And if we look straight across from that, when the market came down to this level, how did it react? As you can see, that proved to be a very important level in the market, and the market reacted by pushing up from that support level. And just as my video said, that is a level where I wanted to be looking for trading opportunities on lower time frames. So let's jump down to one of those lower time frames. And for the purpose of this video, our entry reason is just going to be double tops and double bottoms. If you'd like to learn more about the actual entry reasons that I use at these very important levels of structure, then there'll be a link in the description below that'll help you to find out what those entry reasons are. And it'll also tell you a little more about the EAP, the email analysis program, which is the program I run from my website, thetradingchannel.net. Now if we're basing this entry reason on what I just said, just double tops and double bottoms, as you can see, once the market came down to that significant level of support that we pointed out on the daily chart last week in Structure-Based Trading Episode 1, we did in fact create a double bottom at that area and could have easily made an entry that looks something like this. We'll go with 20 pips below our swing low for a stop loss, and as you can see, our resistance level that we were looking at last week would be where the targets should be taken off, and that gives you a 6.33 risk to reward ratio. Really good risk to reward and a pretty simple way of trading by looking at the daily chart for significant levels and then just using the double bottom, double top entry reason on smaller time frames. And as I said, if you'd like to learn more about my entry reasons, then just click the link in the description below labeled EAP. So moving on now, let's go ahead and go to the dollar yen. And we'll zoom out to the daily chart. And just as before, we'll go ahead and take a look at the clip of the analysis I did on this pair in our previous structure-based trading episode 1. So those are my major levels here on the dollar yen that I'll be looking for trading opportunities at. We're looking at 118.7s, 120.7s for resistance, and 116.3s, 113.9s for support. Let's move on to the euro dollar now. Alright guys, so as you can see, the market did come up into that 118.7 level right here at these previous levels of support, and we got a pretty nice push down from that level, and without even having to go down to the lower time frames. If you'll remember from earlier in the video, I said for the purpose of these videos, we're going to be looking at the double top and double bottom as an entry reason, and as you can see here, we actually got a double top here on the daily chart, so no reason to even go down to a lower time frame. once we get this double top, if we had an entry from the close of that candle with a stop above that swing high, we could have gotten a little over a 1.7 risk to reward ratio on that trade based off the daily chart. And again, guys, if you want to learn a little more about my entry reasons that I actually use in the market, the EAP actually comes with a full extensive training course on all the entry reasons that I use in order to get involved at these major levels of structure. So what are we waiting on next here on the dollar yen? Well, we're going to wait and see if this market either comes back to this level of resistance and can push back down. We'll wait for an entry reason at that 118.5 to 118.7 level, that zone. Or we'll see if the market comes down to one of our support levels and decides to put in some kind of entry reason to go back up. And that's when we'll decide what to do once we get down to these important levels. So that's what we're looking for here on the dollar yen going into next week. Now let's head down to the euro dollar. And just as with the other pairs, we'll go ahead and take a look at structure-based trading episode 1 on the euro dollar. But those are the levels that I'll be looking at for trading opportunities. So for resistance, we have 1.053s and 1.075s. For support, we have 1.015s and 0.959s. Moving on to the pound dollar now. Alright guys, so as you can see, this was that previous level that we were looking at in episode 1 that was touched multiple times around the 1.054 level. And that level actually did have a pretty good reaction from it. This candle did not close above that level. Instead, the wick price action pushed up above this level quite a bit right here before being pushed back down and eventually pushing the market down about 190 pips. Now on our lower time frames, we did not have an entry reason here based on what we're using today, the double top entry reason. So for the purpose of this video, the euro dollar did not have a trade. But as for what we're looking for going into next week, we have now broke above that resistance level. So our next resistance is going to be this 1.0765 level, followed by the next level at 1.0873. Now until we get there, the market could do anything. It may consolidate here for a bit and then eventually break out to the up or down side. So now let's move on to the pound dollar, which is another pair that we were looking at last week in structure-based trading episode 1. And here on the pound dollar, we actually got no entry reason at any of our levels, and all of our levels are still valid except this line here. So we still have a support level that we're looking at here for the market to come down into. We now have a resistance right here. The market has touched that 1.2570 level more than once on this daily time frame. Once here as resistance and once here as support. So now we'll be waiting on the market to either push down to this major support level and see if we can get a bounce off of that, or push up to one of these resistance levels. And this resistance is actually going to be right here now. So either way, if we go up, then we're going to be looking at our two resistance levels at 1.2570 and 1.272. And if we head down lower than we are now, then we're going to be looking at the 1.2152 zone as an area of major support to look for buying opportunities on the pound. Now for the last pair we're going to take a look at today on the dollar Swiss. And just as we did with the other pairs, I'll go ahead and play a clip of structure-based trading episode 1 where we did some structure-based analysis on this pair. So let's check that out now. So for our resistance levels on the dollar Swiss, we're looking at where the market is now for trading opportunities at 1.029s and also above that at 1.058s. We're looking at the support levels being 1.016s and 0.995s if the market does decide to come down from this present resistance level that we are at. Alright, so you can see that we did come up to that previous level of structural resistance we were talking about in that video, which is where the market was during the recording of that video at the 1.02944 level. Now if we drop down to a lower time frame, you can see that we had one of the entries that we discussed today, just a regular double top here on the dollar Swiss, right at that major level of structure resistance. So with that being the case, An entry on this specific trade may look something like this, with stops above the swing high and with that wick all the way down to our previous level of structure, a 4.17 risk reward opportunity, and around a 221 pip drop from that significant level that we pointed out last week. So guys, trading at these significant levels of structure can be a very profitable way to trade if you have the correct entry reasons, something that's rules based, that you can test in the markets, and something that you can repeat time and time again while trading in the Forex market, on a daily chart, on a 4-hour chart, or even down on the lower time frames. Now you can absolutely learn how to trade these significant levels of structure yourself. You can teach yourself different entry reasons. You can go through the market and test each of those different entry reasons to see which one works best, and spend hours and hours testing different strategies to see which one you want to actually back test and use as a trading strategy in the Forex market. You could absolutely do that, but that takes a lot of time, and time is a very valuable thing. So if you'd like to shave a little bit of time off your learning process and learn the entry techniques that I use at these specific levels of structure, and go a little deeper into how I spot specific levels of structure to trade at, then make sure that you click the link in the description below labeled EAP, or click the link to my website, thetradingchannel.net, to learn a little more about that program. And that's going to do it for now. I hope you guys enjoyed this video. I hope you found it to be educational. Don't forget to subscribe if you're not already, in order to get email alerts every time I come out with new educational content here on YouTube. Make sure to head to my website and sign up for my email list for promotional offers on courses and subscriptions that I run from my website, along with a free butterfly pattern tutorial and free long-term analysis. I'm going to put the trading view and my Facebook page in the bottom right-hand corner of your screen. Go over to my Facebook page and like that page. I'm not real sure what I'm going to incorporate into that Facebook page yet, but I may use it as a platform to post trades every now and then, and I'll definitely be using that for promotional offers on courses and programs that I run, as well as free education. Click that like button before you go, and I'll talk to you guys next time.